In today's episode, we're going to be giving you the blueprint on how to quit your job and get into full-time real estate investing. To help us with that, we have Ben Allgaier. He is a real estate investor, real estate flipper, wholesaler, holder, and coach. The reason I wanted to do this topic, Ben, just so you know, is I have a friend who is a cop, and he's been buying and renting rentals from the income that he uses as a police officer. And now he wants to get into flipping, and I don't think he knows anything about wholesaling. So I wanted to almost like pretend that I am him and give me some guidance. If I was new and I wanted to get into real estate investing, where would I start?
Perfect. Yeah, I absolutely love this topic. And I love watching people's transformation from their 9 to 5 and getting into something that, you know, they have that financial freedom, they have that life freedom, and they can kind of go and not be tied down to that 9 to 5, not be tied down to that job, and go and, you know, do the things that we're meant to do in this life, not be stuck to a desk. Like, yeah, all of us were at some point. I mean, I was for sure.
Yeah, it sounds like that was part of your story, right? Like you had something and then you went full time into real estate. At least when I was checking out some of your social, you kind of walked them through the journey. So what would be the first advice that you would give me? Like, okay, should I start off by flipping? Should I start off with wholesaling? What would you recommend?
So the first thing I would say is keep your job for now. Don't go and burn the boats and quit and jump into something and leave your family high and dry. I take care of your family first and foremost. Okay. And I do have a pretty cool story. We started working with a guy about a year ago. Yeah, right about now, about a year ago. He was a firefighter down in Arkansas, and he came to us with the same thing. He's like, "Man, I really want to quit my job. I'm tired of this. Like, I got 3 little kids. I can't keep running into burning buildings and not knowing if I'm going to come out." I'm like, I get it, man. So we started working with him, and he's like, "Man, I just want to flip. I don't want to wholesale. I just want to go straight into flipping houses." So what he did was he went and got his real estate license on the side.
Okay.
And then he started finding deals that were on market, and we helped him underwrite those deals. He flipped his first house and did $80,000. And then he flipped his second house and made $75,000. And he's like, "Well, that's double my salary at the fire department." And I did that in 6 months. So that was a pretty cool story. But for most people, what I would recommend is keep that day job and learn how to find distressed assets. If you can learn how to find the deal, you can do whatever the hell you want with the deal. If you want to wholesale the deal, make quick cash, wholesale the deal, make quick cash. If you want to go and flip the house and you have a real passion for design and building and doing all those things, go do that. But as long as you have that deal, you control the whole thing. You can do whatever you want with that deal and make money in a variety of different ways.
I've been wanting to do that all day. So I agree with that. So, but why is it important to keep the day job? Because I started off in real estate 15 years ago, and I did the very same thing that you're talking about. So I worked full time at my job, and then I worked full time in real estate as well too. Which means that first year was brutal because I basically had like 2 full time positions. But it basically allowed me to learn the business. And then my goal was, okay, after I have a certain amount of reserves, then I'm jumping in full time. So I did that for 1 year. I got to the reserves number that I wanted to. I got to that number, and then I basically went full time. Why is it important to do that?
It's just the peace of mind mentally is a huge thing that a lot of these gurus online don't talk about. They say, just dive in, burn the boats, go and do it. Yeah, that's great. If you don't have people relying on you, if you don't have to make a mortgage payment, if you don't have to continue to pay for these things, like if you don't have a car, great, go and do that. But it's so much easier to work your way into this business if you know that you have that income that's supporting you while you're learning. It's very, very difficult to get in when you know that you have to make a deal work. You know that you have to get that first house. You know that you've got to like make money right now. Most people in this business, what does it take them? 6 to 9 months to make money on their first deal? Yeah. If they're just getting started. I mean, I think that's an actual statistic that's pretty easily findable. But just having that safety and security to know that if I don't get this first deal, if I talk to a seller and they don't want to sell the house, or I can't get them the number that they want, I'm not going to go and fudge the numbers to make it make sense, because that's where people get in a bad spot in this business, is by, tweaking the numbers a little bit to make the deal work. And then they find themselves upside down in the deal. And not only now do you not have a job, but now you're having to bring money to the closing table to get rid of a bad asset.
Yeah. Not only that, but like, I would agree with that. It took me 6 months to close my first deal in real estate. To close my first deal in real estate, it took me 6 months basically. So a lot of people think like, hey, look, you're going to get into real estate, it's going to be all fine and dandy, you're going to source your first deal. There's like a timeline, like from the time that you generate the lead to the time you close the lead to the time you finish up the rehab to the time you end up selling it. There's like a timeline. So I wanted to, you said something very important at the very beginning. A lot of people are like, okay, like, do I get into flipping? Do I get into wholesaling? You said like, hey, get really good at finding distress assets. If you get really good at finding distress assets, everything else plays out. So what would you teach me, or what kind of guidance would you give me if I wanted to get good at finding distress assets?
Yeah. It's a really good question. So there's a litany of ways that you can find deals, right? You can go pay a service like Deal Machine and pull lists off of something like that. Or you can go pay for cold callers that already have lists, and they'll call and do all of these things. But these are capital intensive types of activities, but there's also free leads out there all day long, like from probates to foreclosures to tax liens. These are all free. And you can go look these up on your county website. And I don't know if you've ever used this website called ChatGPT, but
Amazing.
It will show you exactly how to do all of this. So you don't even have to go figure out how to do it. You just type into ChatGPT, hey, show me how to pull foreclosure leads from my county. And it'll walk you through the whole process. And it's free.
That's amazing. Good. Okay. So the way I learned it is like there's three
You're
ways.
still in that voice. You're still in that voice.
Oh my goodness, that's so funny. Let me.
Good. That's so funny. Okay. So basically there's three different ways to find deals. Number one is direct to owner. Mm-hmm. Number two is basically wholesalers. And number three is basically like MLS type of deals, basically on market type of deals. Which way would you say is the easiest out of those three if we break it down into those categories?
The easiest to find properties, to just look for properties, would be on market. Go hire an agent, have them bring you deals. But that kind of pigeonholes you into a couple of different exit strategies. You're not typically going to wholesale a deal that's on the market. Mm-hmm. It's going to be difficult. There's some language in the contracts that make that difficult. If you want to flip a house, sure, go on market, do a little bit of the work yourself, put in some sweat equity, maybe flip the house, make a couple $1,000s, and there's your first deal. If you want to learn to get these distressed assets from the actual homeowners, then going the free route or the paid route with leads is the way that I would suggest. You can also go through wholesalers, but again, it kind of limits your ability on the exit strategy. It's very difficult to wholesale.
Yeah.
I'm sure you know that.
Oh, 100%. Not only that, but like, okay, so like I'm trying to think about like easiness, because to go direct to owner, it's a completely different skill now.
For sure.
Than to go on the MLS or go through a wholesaler. They've already done a lot of the work for you, but it also like makes it so that you're tied to whatever is on the market. A lot of times the margins on those deals are a lot smaller as well too. Mm-hmm. And then you're pigeonholed on your exit strategy as well too. Correct. When you say get really good at finding distressed assets, I'm imagining that you're talking about the direct to owner type of marketing basically, right?
Off market, direct to owner types of assets. Yes.
If
you can find those and you can get proficient in identifying those leads and learning how to speak to homeowners and build rapport, I mean, that's the whole game that we play now, because everything else is commoditized.
So what skills would be required to get really good at the finding direct to owner deals? Because it's more than just it's more than sales as well too. There's 3 or 4 different skills that are required to do that. What would you say those skills would be?
So the marketing is obviously the front end of the entire thing. Learning how to obviously find the leads and then market to those leads. And then having the conversation with the homeowner is the crux of every single deal. Then you do the things on the back end, like finding a title company, finding a buyer, getting the deal closed, right? That's pretty easy now with softwares that we have like Investor Lift and even Facebook groups. You can find investors everywhere. But the hardest part for most people is the conversation with the homeowner. That's where people get stuck because they think that they need to know everything about the house. And that's the first thing that they do when they talk to the homeowner. Tell me about the age of your roof. Tell me about your foundation. Tell me about, all the things that are wrong with your house. That's how most people get into this business and start. I would completely throw that thought process out the window. Go to the homeowners and build rapport. Ask them about their situation, what they're going through right now. Why do they need to sell? Do they have any other options? Like, get to know the core root of the problem and build that connection with the seller. And then they're going to want to sell you their house. They want to sell the house to somebody that they like, not just, some guy who walks in and says, oh, your roof's old. You have a crappy kitchen. Your bathrooms need updated. This is what I can offer.
Got it. Not only that, but the better you understand their situation, the more you're going to be able to present the right solution to them as well, too. Meaning, 100%. Because I had a friend that's like, oh, how much should I offer this person? I'm like, ask him what he wants for the property before you basically make him an offer. Just ask him, be like, hey, how much would you like to sell the property for? They'll tell you what they want for the property. Find out their situation. Like, let's say you want to do a creative deal and you want them to finance it for you. What if they have a $500,000 loan? Then obviously that changes the type of financing that you can get. That turns it from like traditional owner financing to subject to or whatever it is. So I think a lot of the time just understanding their situation. Now, let's go back to the marketing piece. Because obviously like the first step is generating the lead. Then the next step is converting the lead. But you got to generate the lead as well too. So you talked about free sources, like there's different public records lists that you can pull. What would you say would be the most effective way to connect with these? Would you say it's direct mail? Would you say it's a phone call to them? Would you say it's text messaging? What would you say the best way to connect with these different lists, probates, foreclosures, and what other list would you pull?
Yeah, it's a really good question. So where we've had our most success is going directly to their doors and knocking on their doors and having a conversation with them in person.
Amazing. Simple.
It is, but it's a heck of a lot harder for somebody to close a door in your face than it is for them to go, nope, I'm not answering that phone call. So that's where we kind of started. And that's really where we made our moves in this market, is by just going to people's doors and having a conversation with them in person. So outside of that, it's all about the conversation you have with the homeowner, depending on the situation.
So door knocking, basically.
Yeah.
Okay. And then what list would you pull to door knock?
If I were starting from zero and going all the way back to the beginning and knowing everything I know about list pulling and stacking and everything, the different types of lists that you can pull, foreclosures is where I would start. These people have a defined timeline of when they need to sell their house. And most of them have absolutely no idea that there are other options out there other than, paying back the entire balance or getting the house foreclosed.
Got it. Now, when it comes time to door knocking foreclosures, I almost imagine that they go through a cycle. Like, meaning like the first cycle is like, hey, look, I could probably save my house, or I want to keep my house, almost like a denial phase where they're still emotionally connected to the property. Is there a certain time that's best to door knock? Meaning like in California, there's a notice of default that gets filed. That means they're 3 months behind. There's a notice of trustee sale date. That means there's actually a sale date on the property. I've heard of some people door knocking when the notice of trustee sale date gets posted, because now they've got like literally 21 days to sell it. The motivation just increased. Sometimes in the previous phase, they're basically trying to find ways to be able to keep it. Any guidance or advice there?
Yeah, another really good question. So we go out as soon as that notice of default gets posted. So we'll go right away, because what we want to do is we want to build that relationship. Again, we're educating homeowners. We're not there in the beginning to buy their house. We're there to educate them. So if we approach it from an education standpoint and explain to them their options, if those options don't work, guess who they're coming right back to? The guy who gave them all of their options, the guy who walked them through exactly what to do. And now, a lot of these people, they just can't keep their house.
Amazing. So it's funny because 15 years ago when I started, because I started door knocking as well too, there was two different approaches. One, people were like, hey, you're not going to be able to save your house. You need to sell to me. The bank's going to take it away. And then there was the approach of like, hey, look, these are the different options that you have. Regardless of if you want to keep your home, let me help guide you in the right direction so that you can be able to keep your home. And then if for whatever reason that doesn't work out, then I'm here as a cash buyer. What type of options would you go over with the homeowner? And I'm guessing that's the approach that you guys do, where you explain, you give them different solutions. And then if for whatever reason those things don't work out, you're the likely choice because obviously you've been helping them and guiding them as to what's the best way to get what they want.
Yeah. And let's go back to most people's mindset in this business. They think you talk to a homeowner once, you get a contract, you sign the contract, you go to closing.
And you make a bunch of money.
That's just not how this works. You and I both know it's all in the follow-up. So if I know I'm going to knock on that door, I know that I'm building a relationship for a follow-up. Very rarely do you knock on that door and they're like, yeah, I'm ready to sell my house. Very rarely. So when we go out there, it's ingrained in our entire team that the whole ethos behind our company is educating people. So we walk them through their options. Obviously, you can pay your reinstatement amount. Most people can't do that. They're 3 months behind for a reason. They don't just suddenly come into a windfall of money. Their second option is to get a loan modification in a foreclosure type of situation. A lot of banks are just saying hard no on loan modifications. A third option is, we've seen it in the past where they can file bankruptcy, but we do not advise them on bankruptcy because I am not an attorney. And then obviously the fourth option is to sell your house, but we walk them through each one of those options in a very meticulous way and say, obviously option number one, pay back all your money. That's the best option for you. You get out of this whole situation. 2, get a modification on your house, and the banks will typically just take what you are past due, throw it onto the end of the loan, you're fine. And then if those don't work, you have another option, which could be to sell, and we can be flexible on those terms for you. If you need to stay in the house for 30 days, if you need some cash up front, we can do all that for you.
Yeah. And the key to that scenario is just consistency, basically. That's the key, basically, just doing it over and over. Now, do you guys, let's say the homeowner's not home. Do you guys drop anything off?
Yeah.
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 What is it?
It's
hold on.
What is that?
What do you guys drop off?
I love it. We, as dumb as it sounds, we'll go on Amazon and buy those neon sticky notes and just leave a sticky note on their door. It's not a letter. It's nothing. It just says, hey, you have options. Give me a call.
I love that.
Works so much better than a formalized note that somebody gets, because they're getting a million notes from their creditors, from their bank, all of these things. Put a sticky note on their door. They're like, I'm going to call that person.
Not only that, but like I had posted things on the door, but the tape was like, it would like when they take it off sometimes, because the tape was so bad, it would like peel off the paint.
Oh no.
So that's not a good thing right there, So the little neon sticky note, it'll stay on the door and it'll be pretty. And I used to do it with the business card, just saying, call me, basically in the back of it. Yep. But I like that actually a lot better as well too. So what about they answer the door? And I'm kind of going down a little bit down the rabbit hole on this, just because obviously if you've never done this, these are some of the questions that you're going to have. Let's say that they do open the door. Walk me through that.
Yeah. So a lot of people will get this wrong. They'll knock on the door and stand this close to the door. And when a homeowner opens, they're like, why is this person right in my face? So we knock on the door, give them a little friendly knock, take a couple steps back, just out of their face a little bit. Then we'll knock 3 times, that same cadence 3 times with about 30 seconds in between. They'll usually answer the door on the second or third knock. So they're like, this person's pretty relentless here. And then when they do come to the door, you go, hey, Mr. Seller, my name's just Ben. I know this is super out of the blue. You didn't ask me to come here, but I noticed that your lender is kind of going through that process of scheduling a sale. Do you have it handled, or do you need some help? That's it.
I love that. Do you have it handled, or do you need some help?
And avoid the word foreclosure every single time. Don't say foreclosure.
Why?
Because it's an immediate, their walls come up. They're like, nope, don't like that word.
Yeah,
it's a trigger word for them.
I agree with you 100% on that. Okay. So what type of response does that usually give you?
If you do it well, and if your tone and your cadence is right, like a lot of people, when they're getting started, they're super monotone. And they're like, hey, I saw your lender schedule the sale. Do you have it handled, or do you need help? That doesn't work. You got to have a little bit of empathy there.
It's funny. That was the word that was going to come out of my mouth, that like when you said it, I felt empathy.
Yeah.
There.
That's just what we train people to do, is have that empathy, because you're not there to buy the house. Like I said, you are not there to buy the house. You're there to help them, to see what options they've tried, or to figure out, what their situation is. And usually if you get them talking, they're going to tell you their entire life story, because this is a very, very tough situation. And they don't want to tell their friends and family about this. They want somebody to talk to about this, somebody who's not going to judge them, somebody who's just there to listen.
Amazing. Okay. It's interesting because when I asked you for strategy, that's actually the simplest one of the strategy, because it requires the least moving parts, meaning like you pull a list, you knock on the door, you leave a sticky pad if they don't, or a sticky note if they don't answer. Now, if you're going to call them, then it requires an additional step. It requires that you skip trace their phone number at that point, basically. And then if somebody's calling them, somebody's at their door, the person at the door may be able to make a better connection. Not only that, but now being on the telephone, it actually requires a higher level of skill, because they can't see you.
No.
They can only make a decision if they trust you based on your tonality, based on your messaging, and based on the conversation that you're having as well, too. So that requires a higher level of skill right there. Now, obviously, showing up to the doors at the very beginning is probably going to be the least cost effective as well, too. You don't have to mail out 2,000 mail pieces to get one phone call. Not only that, it's getting your reps in at the same time, meaning you're having conversations with people. Now you actually have real things to talk about. So I love that, and I actually agree with that wholeheartedly. Now, at some point, and then there's different lists that you can do that with. You can do that with foreclosures. You can do that with probates. You can do that with just different lists depending on what you want to target. But that's the key, getting really good at distressed assets. What about direct mail, and what about like PPC or pay per lead? Do you teach any of your students that? And is that at a little bit of a higher level, meaning like once you actually have money through the door, what would you say?
Yeah, it's a very market by market kind of strategy. So mail works well in some markets. It just doesn't work in other markets. And unless you have the capital to test to see if it does, I recommend you don't.
At the very beginning.
We don't teach our students any of that. We teach them how to be really good on the phones and how to be like FBI level investigators to find homeowners. Because there's a lot of times you'll go online, there's not a good phone number for somebody. So what do? Well, you go on Facebook, try to find them on Facebook. If you can't find them on Facebook, what do you do then? True People Search is a free website. You can go on True People Search, and it has a whole list of their associates. So you go call their associates, their relatives, and try to get a hold of them. If you can't get a hold of them there, well, you can call their neighbors. We call neighbors all the time. Like, hey, do you know anything about this house? Especially if it's a vacant house. You know anything about this house? Oh, yeah. The neighbors love to talk about what's going on in the neighborhood, and they usually have the insider info on it. And talking to the neighbors directly, you're like, hey, I saw this house was vacant, or, I saw these people were kind of going through a tough time. Do you know anything about the situation? Yeah, I do. I actually have their phone number. Here you go. Give them a call.
Not only that, but now the harder it is to get a hold of them, the least amount of people that are going to be willing to go through that, which means the opportunity is actually higher in that
Absolutely.
sense.
Absolutely. Yeah. That's what we teach people is if it's difficult to get a hold of them, good. Keep digging.
Okay. So now we talked about the marketing. Obviously, there's different ways to market. There's some ways that are less costly but require more time. At the very beginning of your transition, it may be in your best interest to do something like that. Then maybe as you get more skilled up and you have the money, then you can test out different marketing techniques like direct mail or pay per lead or pay per click and that sort of thing. Now, do you recommend that investors have a real estate license? Yes or no, and why? Hold on. I want to repeat that question. Hold on one second.
Do you recommend that real estate investors have a real estate license? Yes or no, or why?
That voice is insane. It is funny. So we have people in our community that do have real estate licenses that don't. When I got started, I actually did have a license, but I don't anymore, and I got rid of it pretty quick. There's a lot of people that think that the license protects you. However, if you're doing things transparently, if you're being honest with homeowners, you don't need any of these licenses to protect you. You don't have to have it. But that's where people get themselves in trouble is they lie. They say, you know what, I'm going to buy your house. And then they wholesale the house and they have a million people walking through the house. Just be honest. Tell them, hey, listen, we don't buy every house that we walk. And sometimes we bring in our investor partners to go ahead and close. Same terms, same deal. It's just going to be somebody else buying the house, but I'll be your contact the entire way. So if you set yourself up to mentally be transparent the whole time, I know sometimes the honest answer is a tough answer to give, but if you can just focus on being honest, being transparent, and making that seller feel comfortable the entire time, you don't need a license.
I love it. You know, it's funny because I actually started selling real estate before I started investing into real estate. And I used the license to bring in the active income, basically. And then I took a lot of training there to find motivated sellers. And then more recently, like the last couple of years, I've taken a lot of training on how to get really good at finding distressed sellers. And I've taken more of the investor approach now. I'm still a very large bulk of my business is active helping people buy or not helping people buy, but helping people sell their property, which just basically increases the deal flow. But I kind of wanted to get your take on that as well, too, just to see, hey, look, is there pros and cons? But I think as long as you're transparent, that's the most important piece of the puzzle. Okay, so we talked about marketing. We talked about the conversation as well, too, how to have these conversations with people. Now let's talk about the offer. So you make an offer, they accept your offer. How do you determine if it's better as a flip? How do you determine if it's better as a wholesale? And then is there more risk to one than the other? And how do you determine like, hey, am I better off flipping it or wholesaling it, basically?
Yeah, I would say if you've never flipped a house before, flipping your first house is going to suck. It's not easy. Finding contractors, making sure that all your documents are in place with the contractors, everybody's on the same page. It's getting the financing lined up. Like, it is not an easy process. So we encourage everybody in the beginning, other than Chris, who just decided, the firefighter, he was like, screw it, I'm just going to go flip houses. Other than him, everybody else has been like, you know what? I'm just going to wholesale, understand the process. We get properties under contract at the same price where we can either flip it or wholesale it. There's profit in it for both. Obviously, the wholesale profit's a little bit less based on our formulas. The flip profit can be a little bit more. But when I flipped my first house, this was my second house, we went into this house. We're like, okay, great deal. We started pulling back the drywall and found that there was $15,000 in termites, which significantly cut into our profit. We were going to make $45,000 on the deal. The deal took about 3.5 months longer because we had to rip everything out of it. Cost us an extra $15,000 plus the financing cost. So we ended up making like $22,000 after 8 months of a rehab.
That's
I knew you were
horrible.
waiting on that button.
No, I'm actually going to play with it. It's funny because a lot of people, like when they think real estate investing, the very first thing that they think about is flipping real estate. And they think that flipping real estate is actually going to be the best way for them to get into real estate investing. But what a lot of people don't realize is that there's a lot more moving particles in the flipping property, and there's a lot higher level of risk associated with it as well too. So like, for example, like let's say you buy a property at a great price. Let's say you find the right contractor and you flip it, but it takes you 3 months to do it. Now let's say that the interest rate went from 3 to 6%, and the market changes 10% in that period of time. Your entire profit just got wiped out completely.
Go on. Yeah.
Not only that, but let's say the same thing happens. Let's say the market stays strong, but your renovation budget goes from $50,000 to $100,000. Or let's say that you're doing some unpermitted work on the property, and all of a sudden you get a code violation, and the city starts red tagging you or tagging you. Or let's say that you get the wrong contractor. So at the very beginning, it's almost like, okay, like not only what is the highest reward, but what is the lowest risk as well too, in being able to analyze risk to reward. Reward only matters just depending on the level of risk. So wholesaling, it's like literally very low risk because somebody else is bringing the money to the closing table and you're making a spread on it. And regardless if they make profit or not, you've already secured your profit, which means you can continue reinvesting back into the business faster. So I would also encourage some of the viewers that if you're kind of like, okay, what do I do? You may want to start off wholesaling as well too, learning that process, then maybe testing it out on a flip if it makes sense for you to do it. I realize we just flipped the property, and I like properties that are fully renovated that I just got at a great price because I don't have to go through the construction piece. No. We did one where from start to finish, I think we closed in about maybe 18 days. Wow. From the time we closed to the time we closed on it on the open market was like 18 days. And it was a slam dunk because the property was already like ready to go. And we literally just staged it, cleaned it, and put it right back on the market. It was an amazing deal. And then we've had other deals where it takes us 6 months to renovate it. And I was like, man, like, was it really worth it?
No.
You know?
It's usually not. Yeah. And I mean, people get this mindset of HGTV. I know how those HGTV shows work. I used to work for a guy that had an HGTV show that came to him and talked to him about, being on a show. And they said, hey, don't worry. Most of the people that flip houses on HGTV don't make any money. It's fine. They typically lose money. It's just for the viewership. I'm like, see, that goes to show you right there that, TV isn't all that it's made out to be. So these people get these ideas in their head of these flipping shows online. It's not real.
And it's so misleading as well, too. Not only that, but where they'll make the money is they'll make it on the coaching. Then they'll come up with a program like, hey, let me teach you how to lose money on properties. Hold on, let me
teach you how to lose money on properties, and then they sell you the program.
That's part of it. So cash conversion cycle. And then the other thing I wanted to kind of explain is as a business owner, and a lot of people don't realize this, is you got to start thinking about cash conversion cycle now, right? Yeah, like meaning from the time you invest the money into marketing, how long does it take for you to get your money back? If you're flipping the property, your cash conversion cycle just went from 6 to 9 months to 6 to 12 months potentially, depending on how long it takes you to flip it. If you're wholesaling it from the time you get the lead to the time you get the contract to the time you get paid, it could be a third of that money, which means now you get your money back faster, which means now you need less money. It's less overhead intensive, which means now you can continue to reinvest back into your business and turn that money. Time is also a risk factor, so the less time, the lower the risk as well too.
Absolutely.
What's your formula that you teach your students? Like meaning what at what prices should they be buying in order to have both options open, the flipping or the wholesale?
Yeah. So we kind of stick pretty heavily to the 75% rule. So 75% of after repair value minus rehab costs. That's our MAO, our max allowable offer. And we usually start, obviously we're going to start below our max offer. But most flippers can buy at about 80% of ARV minus rehab. So if you're getting under contract at 75%, you already have a built-in 5% there. Yeah. And at that 75% of of ARV minus rehab, you know that you can go get a loan most of the time from any of these institutional lenders for that 75%. So you can go ahead and flip that deal if you want to. And I mean, if you can get 100% financing, which there's so many lenders out there that will do that now, you can come and purchase a house, flip it with $0 out of pocket.
Yeah. There's some great lenders out there that will basically finance the deals with very little money down. Now, and that's so interesting because 80%, that's what, and you're still leaving margin for a flipper at 80%. They have margin to be able to flip the property basically. Now, obviously, if you get it for lower. Now, are you teaching your students to hold any of them? And should somebody hold at the beginning? So I'll kind of share with you what I did at the very beginning. I basically would make $100,000 and then I put that as a down payment for a rental. And then my business would be broke because I didn't reinvest back into the business. I bought a bunch of rentals, which played out well because the market went up like crazy. Rents went up like crazy. And I've got rentals that I've owned for 15 years. But sometimes I'm like, well, had I not done that, what if I would have reinvested back into the business to blow up the business a lot faster? So is there a formula for that? Should you keep it? Should you rent it? Where do you recommend that they start off?
Yeah. So there's a book that most real estate investors have read called Rich Dad, Poor Dad.
Okay.
And that model worked back then. Like when that book was written in 95, that model of put $10,000 down on a $100,000 house and then put a tenant in there at $1,500 a month, you're going to clear $500-$600 a month. That model doesn't work anymore. The house prices have gone up so high, and with interest rates where they are right now and having to bring a bunch of cash to the table, now you may clear $400, $300, $400 a month, but
you have $100,000 in equity tied up into the property for $400 a month.
And it's also, you're paying taxes, you're paying insurance, you're paying maintenance, you're paying vacancies. So one of my mentors who had a massive portfolio of houses just sold every single one of his rentals because he's like, it's not worth it. Yeah, the play is long-term appreciation and building that equity. But in the beginning of starting a business, you know how many rental properties you have to replace your 9-to-5 income? A lot. And that requires a massive amount of cash in the beginning to be able to go and build that portfolio to replace your 9-to-5.
Let's talk about, so essentially, and when we talk about rentals, a lot of people paint it as this like, oh my God, that is this amazing opportunity to like retire or have all this residual income. I look at it as, and I learned this from somebody else, I won't take credit for it. There's 3 different buckets: fast money, medium money, and slow money. Fast money could be like selling houses or wholesaling or flipping, meaning it's active income, meaning like you're making big chunks of money at a time. Yeah. You need a fast money route in order to do the other 2. The renting out the properties, that is a slow money, meaning like you're making money over time, meaning if you own a rental for 10, 15 years, eventually the rents will go up, the principal will get paid down, and you'll build wealth. Now, there's some people that only focus on active money and don't focus anything on slow money. There's also tax incentives to the slow money as well, too. So I think is first, when you start off focusing on that fast money and how do you get money now is the most important thing to continue reinvesting into the business. Once you get that, then at that point you can make other investments if you choose to make the other investments that are slower money. I actually did somewhat the opposite, where I made that fast money, but then I took that money and invested into the slow money, which played out well, but I don't know if that same strategy would play out equally as well today.
Yeah, that's just something that we teach everybody in our community. It's like the first thing that they learn is you have to build your active income to be able to go and then purchase passive income.
100%.
So what's the fastest way to build active income? Just like you said, either flip houses or wholesale. What's the least risk way to build active income? Wholesaling.
Yeah, I agree with you 100%. Now, what systems would you need to get into, like, would you need a CRM? Do you recommend that they just have a bunch of sticky notes everywhere, an Excel sheet? Like, what do you recommend? What do people need at the beginning? And then also, like, if you wouldn't mind going over list stacking real quick, what list stacking is and why that's important. I think you mentioned that at the very early on.
Yeah. So when we decided we were going to go down this foreclosure route, however many years ago, I did it all by myself. Drove around to houses, built the list, made the phone calls. I ran everything off of a Google spreadsheet. So yeah, you can go and invest a couple $100 a month into a CRM. We have a CRM provider that we work with that's kind of built us a custom CRM called Pete. Little plug there, but we did $2.5 million from my cell phone and a Google spreadsheet. You can make money without having to build this massive infrastructure and overhead. And that's what I tell people in the beginning is don't make your overhead here to where now you have to do all these deals to be able to cover your overhead. Like make the systems that are free work for you and work in them so that now you can then go and afford to do some of these other things, like maybe hire a cold caller, maybe hire a VA to go and pull the leads for you so you don't have to do that anymore. So you can do this cheaply.
Yeah. And at the very beginning, I think that helps because if you need a deal, it's different than wanting a deal. Yep. And a lot of times people can feel that as well too in 100%. Your approach, because obviously in real estate, we call it like commission breath. Somebody has commission breath.
Yep.
Got it. Okay, cool. Let me ask you this. Obviously there's a lot more things that we can talk about. What I was going to say is if somebody wanted to get a hold of you and somebody wanted to get involved in your like mentorship program or somebody wanted to connect with you at a deeper level, what would be the best way for them to do that? And are there any final finishing thoughts with this?
Yeah. So we just launched something pretty cool that we've been building for a while. So we have a lot of people that have reached out to us on Instagram and said, Ben, I know there's a million pieces to the real estate puzzle. Like there's no way with my 9 to 5, with my family, my kids, there's no way I can do all of these. I can't find a seller, get a contract, find a title company, find a buyer, make sure the transaction coordination goes well all the way to closing. Like I can't do all of those things. So what we just launched is a program where we essentially teach you how to find the leads and find the sellers and have people raise their hand and say, I want to sell my house. And then you pass it off to our team. We'll get it under contract. We'll go handle the transaction coordination. We'll find a buyer, a title company, and get it to close, and then we'll split the profits with you. So that's all over our Instagram right now. We're doing a heavy push right now on Instagram to try to make real estate not this club that only the people with a bunch of cash can get into, or the people that know the strategies. And like, you know how it is in a lot of these markets. If new people try to come in, the incumbents push them out. They're not allowed in. Or it's very difficult to get in. And we don't want that to be the case anymore. Everybody should have access to this information.
Not only that, but I think the way that you're explaining it is there's so many different skills that are required to basically make it in this business that if you can just focus on one of the skills instead of having to focus on the other skills, it actually makes the process easier, which increases the chances of you being able to succeed. Meaning like you don't have to learn the sales skills, how to communicate with the people with the approach that you're saying. So it eliminates one of the skills that you have to learn. Over time, you can learn them, but you're starting off with a very basic skill. So what's your Instagram and how can people get in touch with you?
So, Ben, I do want to say thank you so much for taking the time to be on the podcast. In today's episode, we had Ben Allgaier. He talked to us about, hey, you want to quit your job? How do you get into real estate investing? Talked to us about strategies, flipping, wholesaling. If you've enjoyed this episode, make sure to hit that subscribe button. If you feel that this episode would be helpful, make sure to share it with a friend.
Thanks so much, Ben. Appreciate you. And then until next time, to our viewers, make it a great day, guys.